analyst thinks the government shutdown might be stalling some crypto progress and a new crypto index could be on the way. Hey there, it's Jenny Horne. This is Crypto Corner on Schwab Network. It's time to welcome in Adam Lynch, director at Schwab Equity Research. And Adam, Bitcoin broke out to a new high this week. Really, what's jumping out to you on this latest move to the upside in Bitcoin?
Yeah, hi Jenny. I think October is here. I'm sure we've mentioned it before, but in case the audiences forgot, October has been one of the best months for Bitcoin prices, particularly over the last couple of years. It was up nearly 11% last October and over 28% in October of 2023. In fact, over the past 10 years, Bitcoin has gained on average 21.4% during the month of October. So we closed September with Bitcoin priced around 114,000, and today it's up near 123,000. As you mentioned, it hit its all-time high of nearly 126K on Sunday, breaking the 125,000 mark for the first time ever. Now, since then, we've seen a small dip, likely due to profit taking. I think it's a very healthy sort of an expected kind of pullback, right? And any sort of consolidation or support here at the 122 to 124,000 range would be very impressive. Now, one thing to keep in mind this time of year is just general market volatility. While October tends to be a pretty big up month for investors, it can come with increased risk. Since 1990, the CBOE VIX index has actually experienced its largest percent deviation from average during the month of October. So if we see the stock market start to go wild, we could see Bitcoin's price move a little bit more than expected too.
Okay, and amid this rally, the U.S. government remains shuttered. A TD Cowen analyst, though, raised a cautionary tone about crypto progress being stalled. So walk us through that thinking, Adam.
Yeah, unfortunately, the momentum that we had for the crypto-related legislation this summer has come to a halt. Over the past couple of months, the SEC has been exploring different ways for exemptive relief for these crypto products that are coming, digital asset companies that are creating tokenized securities. But now, what is happening is that, according to Jared Steinberg of TD Cowen, these efforts could be on ice. This week, he said that the firm does not see a scenario in which the SEC is able to resume work on any policies that are important to the crypto sector until there's a deal to fund the government. So how long could it last? Well, the longest on record was back in 2018, 2019. It was 35 days. Prior to that, the longest one had been 21 days. And there's a handful of important dates coming up in mid to late October when those government employees start to miss paychecks and the impact of the shutdown becomes more serious. So my guess is that it ends sometime in that range of 21 to 35 days, but it could go on for longer. Now, when things do start back up, there's likely to be higher priority items for the government to deal with, increasing these expected delays. In the interim, though, with the SEC essentially being closed, the in case of emergency crypto policy has been turned over to the Fed, the Office of the Comptroller of the Currency, and the FDIC, which can all stay open during these government shutdowns.
Okay, and last but not least, investors may soon also have access to a new index entirely focused on crypto. So what can you tell us about that?
Yeah, this is a fun one. So I think almost every investor is familiar with the S&P 500, right? Which represents essentially the largest 500 stocks by market cap here in the US, and it's used as a benchmark for performance. So if I pick a stock or ETF and it goes up 10%, is that good? Well, not if my benchmark's up 20 or 25%, right? So we often see the digital asset returns being compared to equity benchmarks like the S&P 500, other assets like gold, or cryptocurrency only indices like S&P's cryptocurrency broad digital market index. But this week, S&P announced plans to expand their crypto index offering with the launch of the S&P Digital Markets 50 index. What they've done is collaborated with a company called Denari, which is a leading provider of tokenized US public securities on this index design, and they're going to be creating a token to track the benchmark. The index is designed to track a wide range of companies and digital assets connected to the crypto ecosystem. So it's expanding a little bit more than the cryptocurrency only ones. This approach will combine the cryptocurrencies with publicly traded crypto linked equities into a single index for the first time. The plans to include 35 companies, in the digital asset operations, infrastructure providers, financial services, blockchain apps, etc., and combine those 35 companies with a basket of 15 cryptocurrencies. Now, I think it's a great sign for the crypto industry. Since they'll be making this index available via digital shares, they're not only tokenizing the index, but they're demonstrating how this blockchain technology and infrastructure can help modernize index creation. I see this entire thing as just another sign of legitimization of crypto, and it will hopefully help these assets become even more established in the world of investments.
Okay, and great place to leave it. Thank you so much, Adam Lynch, for all of that insight every week. And don't miss Crypto Corner, of course, on Schwab Network every Wednesday. Subscribe to our channel to get more content every market day. I'm Jenny Horne. Thanks for tuning in.